Hello and welcome back to another episode of the Investor Financing Podcast. Today's show is going to be all around short-term rental investing and lifestyle design, living abroad in wonderful countries and making your money in the States still, and being able to successfully operate a business from thousands of miles away. And this business we're going to talk about is short-term rental investing. So please welcome Tim Hubbard to the show. Tim has an interesting background. He was in commercial real estate brokerage for a long time, cut his teeth learning about real estate. And then I believe about 12 years ago, he got into 13 years ago, got into real estate investing, short-term rental properties. He did the house hack and, the traditional things that we do to get started in real estate. And then he realized that short-term investing was the way to go. He got really good at building systems and processes, and that's how he can live out of the country for the last 5 years, give or take, and run his business and grow his business. And I think he's in like 3 or 4 different cities throughout the U.S., and he's got a team. I also heard you on another podcast that you're building actually a laundromat to do all your laundry. So I do my homework before I get guests on the show. So thanks for joining us.
Thanks for having me. Yeah, happy to be here.
So so what was your first kind of look at a short-term rental? Like, can you just dive into that right there? Like, what clicked in your mind, and then how did it run, and then how did you scale it to 30 plus units?
Yeah, sure. Well, I love traveling. That's kind of how I got into real estate to begin with. I was lucky to go on a short exchange program when I was in high school, and it just I always wanted to have that flexibility and ability to do that. So that's how I got into real estate in the first place. So since then, I've always been staying in short-term rentals too, stayed in hundreds all over the world. And I was investing in real estate traditionally for a while, for about 5 or 6 years with long-term rentals. And on a trip to another market, looking at some investments as long-term rentals, I was staying in a short-term rental, and I looked up the price of the property and I knew how much I was paying for it. And I calculated the quick returns, and it just kind of clicked in my head. I'm like, oh my gosh, I'm looking for long-term rentals in this city, renting a property that's making 5 times the return that I'm going to get on these long-term rentals. So it kind of just clicked there at that point. And I already had some properties I thought would be a good fit for short-term rentals. So I started converting a couple of them over and haven't stopped.
Most of your holdings are in Tennessee?
Yeah, most are in Tennessee. I've been expanding in Oklahoma City, though, and I started originally in Sacramento. So that's where that's where I began a while ago.
Did you grow up in Sacramento?
I did, yeah.
Folsom High School?
I went to Casa Roble in Orangevale, so neighboring city. Yeah.
Cool. Great place. So you started running your first property, and you realized, man, this is just makes sense, and it's more of like the hospitality business. You got to get used to the turnover and things like that. What tools are you using today? Do you even need to use AirDNA, or is it like you got it to the point where you use your own kind of formulas, or do you still use tools like that?
I use a bunch of tools, and I'm always exploring new ones. I mean, AirDNA is really great for those that are listening that might not know what it is. It's basically statistics and data on short-term rentals. So we can use AirDNA to find out potential occupancies, potential daily rates, those types of things. So I think that's most valuable when you're exploring a new market. For me, expanding in markets that I'm already in, I kind of have a pretty good idea of what I'm going to expect with a new property. So, but it's still really helpful information. And if I see an opportunity come up in a market that I'm not familiar with, then I definitely use AirDNA and some other sources to get a good idea of what I can expect. But I also use a ton of software tools for automating the whole business too. There's from property management software to automating the pricing to digital guidebooks to digital locks and home hardware, smart hardware. So there's a lot of options, a lot of good stuff out there these days.
I'm in a lot of groups on Facebook specific to short-term rentals because I don't own any short-term. I have all long-term, and I'm like, all my colleagues own short-term. I'm like, wait, I got to wake up and smell the coffee and at least get a couple for the cash flow purposes. But I'm seeing in a lot of these posts that bookings right now are soft in certain markets, like the Smoky Mountains, it seems like, and places like that. Where, with this recession, oncoming recession, and interest rates going up, where do the markets, what markets do you think will see a significant downturn versus what people were accustomed to over the last year and a half? It's kind of become a boom, and anytime there's a boom, there's kind of like this, like people get in at the wrong moment and they're paying too much. Where should we be careful, do you think, right now?
So short-term rentals. Short-term rental can be any type of property, right? It can be a tree house, or it can be like a 15-bedroom mansion on a coastside next to the ocean. So for me, the type of properties that I invest in are in urban areas. They're in cities where I've seen population growth and where more people are moving to. And so I haven't seen a slowdown. In fact, it's been really, really busy, and I'm expecting it to kind of go that way. Really, even if we have a recession, and this is kind of interesting. Again, this is going to depend on the type of property, but I was just joined in on an online conference recently with some of the biggest hoteliers in the world, hotel chains with tens of thousands of rooms, and they're seeing their business travel come back, believe it or not, which was their most profitable sector before. So my properties, the thing is, people are traveling for work now, but work and life have sort of merged, right? With all of us being able to work virtually. So that has extended the average reservation too. So on Airbnb, that's their fastest growing segment. Over 20% or so of their reservations now are for stays over a month. So even though we may have cut back on some work travel, a lot of these people that are traveling are staying longer. So in this conference I was recently in, they're most bullish on areas that are urban. Not for me, I don't want to go too urban where the prices just don't make sense, like a Manhattan or a San Francisco or something like that, but an urban area that has a leisure component to it. So people will still be traveling there for work, but then also deciding to maybe hang around for the weekend, or maybe go a weekend earlier and extending that stay. And by extending that stay, we lower our operational costs, and then we're more profitable. So those are the type of cities I've invested in: urban cities, but not too dense. A city with 500,000 people or more. And I also got into those because those were markets that were good for long-term rentals. So all my properties I bought as long-term rentals, and I just switched them over. So there's a million ways to do short-term rentals, but that's the way I'm doing it. And I'm not squeamish at all about an oncoming recession with these types of properties.
So you're not really buying like the destination, like the Smoky Mountain type properties per se. You're buying more of the kind of like where it could be a work stay, but there's a leisure component, maybe like a Knoxville. I'm just throwing things out.
Yeah.
Memphis. I see that you're in Memphis. And so there's a lot of people traveling for business. People might be doing some recreational. And now you're seeing people that are kind of becoming a little bit like semi-nomadic, like what you're kind of nomadic, right? So
pretty much, yeah. I mean, I split my time between Brazil and Colombia now, but before that, yeah, I mean, I would stay in places for a month at a time, couple months at a time, even in these cities, before I bought properties. So, and that's happening all over the place. So yeah, not to say that the vacation rentals in the Smoky Mountains and those can't do exceptionally well. They can. I mean, you can really crush it with those properties. It's just that there's a different dynamic there. Those are vacation rental type properties. And for me, if there was a recession, some of that discretionary income goes away, right? And so people staying in vacations, it's very likely that could get cut down. Now, if you have a property in a vacation rental area that's maybe a 2-bedroom, or it's a little smaller, where someone's working remotely and they say, hey, I want to go to the Smoky Mountains because I love it up here, but I'm just going to work up here, then I think that's a little less risky as well. I think it's maybe the really large vacation rentals that could get hurt a little more than others, because the likelihood of someone renting it for a month is probably not as likely.
Okay, walk me through your mindset here. I'm going to give you a kind of a case study, and it's me. So I told you I own only long term, and now I'm living in Las Vegas, Henderson, and I'm like, what? I'd really like to own a property close to me just because I'm here, and there's tons of tourists coming to Las Vegas. There's tons of business moving here. It kind of fits that kind of ideal situation for short-term rentals or midterm stays.
Yeah.
How would you go about like sizing up an area like Las Vegas or Henderson? Like, what would your initial, maybe buy the zip codes with the AirDNA? What am I looking for price to, ADR, or what's kind of a good rule of thumb? What would be your mindset about, hey, like if you were to be looking at this market, what would you look for?
So for me, I still like to buy properties that make sense as a long-term rental. And that gets much harder to do if you're buying like in the best touristy area of a city or right downtown because the properties are just too expensive. So for me, a lot of those properties I've found in midtown sort of areas. So they're not downtown, but they're not in the suburbs. They're right in between, which means that they're also pretty close to entertainment and restaurants and stuff like that. So for me, those are the properties that I like to stay in when I'm traveling. And those are the properties that I invest in. I think AirDNA is still a great way to analyze the potentials there. I usually don't get into an investment if I don't think that I can make three times the long-term rent. So if it's renting for $1,000 a month, I'm gonna want to hopefully get 3,000 in short-term rent per month, or around there.
So in Tennessee, what kind of, I mean, obviously prices have moved significantly. Tennessee is no exception to that, right? But
Right.
what were the kind of the price points? Were you buying like 150,000 or $200,000 assets before this kind of last 3 year run up?
Most of my properties are small multifamily apartment buildings. So I also like that because you have economies of scale there. Like an 8-unit apartment building, for example, with small units. I have one housekeeper that can handle that, all those units on one day, versus having like 8 homes that are scattered out. You basically have to have 8 different housekeepers if they're all checking out on Sunday. So that's another thing that I look for. And so those purchase prices, yeah, when I started out there 6 years ago, there were some in the 300,000s. Now they're getting close to 1 million. Just based on how many units are out there. But a lot of them still make sense. With that time, I know it's really hard to look at markets now and say, oh, this property 5 years ago was half the price. But the rents in a lot of these markets too were half the rent. So the rents have gone up with the purchase prices. And so if we're just looking at the cash flow numbers, then there's still definitely are deals out there that we can find that make sense.
And so when you were growing your business, you have partners with your company, which is called Midtown Stay, or is it just you? Or
It's just my company. I do have a couple of properties in my portfolio that I've partnered on.
so are your properties typically, are they usually turnkey when you buy them, or do you usually go in and kind of value add and then refinance when you like increase value equity?
I started with value add ones. I try to stay far away from those now. There's the time money equation too, and if you spend 6 months renovating a project that you could be renting with high short-term rates that whole time, then you got to really factor that in. But for me, I moved out of the U.S., so I'm thousands of miles away, and I don't have like a construction team. I have a really good management team, so I'm not really looking for value add projects right now. But those are a lot of times where you get a lot of value, and yeah, you can cash out and get your money back. So some of my best investments were value add deals, but I've also had some that were pretty much turnkey, and they worked out really well too.
Are you doing all like the pricing yourself, the dynamic pricing, or is that handled by a third party?
I use a company called pricelabs.co. So they're one of the industry leaders with dynamic pricing, but there's a few out there. And yeah, they essentially are plugged into all my listings. So every day prices change based on occupancy in that local market, based on season, based on day of the week, based on if there's events in town. They've really come a long way with the dynamic pricing software options.
Do you have to like when PriceLab goes in? Do you have to like accept what, or do they automatically price it? You don't even have to do anything. You just kind of let it go.
Yeah, you can let it go. You can set parameters, so you can say, I don't want to rent this property for less than X amount. and I don't want to rent it for more than X amount. And you can set a base level. So you set the 3 parameters, the high, low, and your base. And then based on all their metrics, it's going to adjust it either up or down from that base.
What's been your best deal and what's been your worst deal?
In terms of short-term rentals?
Yes.
I would say my best deal was one of the early on ones where I just fully renovated it. So I would say it was my best deal, but it was also most work. It was a huge value add, but it was a cool historic property. You know, it's over 100 years old, has tons of wood character. It used to be like a single family home turned into eight apartments. It was very unique, and I spent a lot of time renovating it. So I've gotten all my money back from that one on a cash out refinance, but also it does really well as a short-term rental because it's historic and people do kind of like experiences. So I'd say that is my best one. But it also was a ton of work. So if you count that, the worst one I would say was I bought 8 townhomes. This was actually after doing the other one. And these were pretty much new. They were built in 2008. I was like, I don't want to do a big renovation project anymore. And so I found these. They were in the same neighborhood. Thought they'd be really good for short-term rentals. And they weren't bad. It's just that the return, so they were 3-story condos, garage on the bottom. So having the stairs is less appealing for some people. And they all had 2 HVAC systems. So all the utilities and expenses were higher. And the difference between what I could get on a long-term rent with those versus what I could get on the short-term rent was far less than what I could on one of the units in this other property, for example, because these were newer townhomes with a garage. They're renting, $1,250, and my short-term rents coming in are like $2,500. So the spread wasn't as much. Now the property still did really well. I got a good deal on it. I've actually sold them since then and rolled it into a different project. But I think that was the worst performing short-term rentals that I had.
And how did you set up your SOPs? Like I heard on another podcast that you have virtual assistants. You have like virtual assistants in the Philippines. Yeah. Can you kind of give me a kind of high level of how you operate?
Yeah, totally. So my management consists of virtual component and then on the ground component. So the on the ground is maintenance and housekeeping. And I have a couple excellent managers that help oversee all of that. And then the virtual components, all of our receptionists, bookkeeping and all those, the guest communication piece. We can handle all the guest communication online. So my SOPs, I guess it just came from experience, right? When I first switched these short-term rentals over, a couple of them, I was managing them myself. So I think that's good for anyone getting started. And maybe you're only doing it for a few weeks, but just to get an idea of the questions you're getting and kind of how the process goes. And after a while, you see, okay, I'm getting the same types of questions. So you can provide answers to those questions before you even get asked. And you can send those out in the form of a digital guidebook or automated responses or pre-programmed messages. So we have all those dialed in our software, and our receptionists help oversee that. They help vet our guests, if someone's looking a little suspicious or they have bad reviews. They help with the charging process. I get a lot of our reservations from Airbnb, but I also have my own direct website, and then we're on VRBO. And for anyone out there, I highly recommend being on multiple channels too. So there's quite a few things to monitor, and all the virtual component can overlook that. So I guess it was just one step at a time, and I use a program called Notion online. I don't know if you've heard of that. No. But it's my favorite software discovery in the last couple of years. It's essentially a platform that allows you to visually organize a lot of resources you might already be using, like Google Drive and Dropbox and PDF files and Excel sheets. So you can create these dashboards online that link to all these different resources. And so I use that for all of our instructions for our team, and basically all of our SOPs are put in there.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. So when there's a booking, basically your virtual team, your virtual receptionists are interacting with the client. So you're not getting really involved unless there's some kind of problem.
Yeah, even then, I mean, the cool thing about short-term rentals is that if we are investing in the right properties, is the cash flow is a lot higher. So we can afford to hire help. So I've really separated myself from all of the guest management, basically. So a lot of our reservations are getting instantly booked. That's pretty common on Airbnb. You know, most people are instantly booking their reservations. So our reservation team will vet to make sure that those guests are going to be good. All of our lock codes, messages, all that stuff's automated. If the guest asks any questions outside of that, we've got someone to respond right away. We've got a phone number. And then if anything happens on the ground, our virtual receptionists are communicating with our housekeeping, our maintenance, or our managers.
What about when, I mean, you have established housekeeping and so forth, but if you were needing to find somebody to replace a housekeeper, there's a lot of websites now that are geared for short-term rental industry, right? You can go on and find cleaners and stuff. Any tips there?
Yeah, there definitely is. And this is kind of like this business. It is a business. Although it doesn't have to be, you know, running long-term rentals is a business too, in my mind. You know, you can have really poor long-term management and it becomes a giant headache, just like you could with short-term rentals. So there's a way to automate pretty much all of this in a way that's really good for your guests. So, but it depends on what stage you're at with your short-term rentals. So if you're just getting started and you have one rental, for example, you're going to have kind of less efficient options than you would if you had 10 properties. So having a good housekeeper at that initial stage can be really, really good. They can even help you with the management too. You know, you can link their phone number with the guests. Of course, it's something you have to talk with them. But one website that comes off top of my head is Properly. I think their website's Get Properly. And that was a mobile app set up to create housekeeping checklists for housekeepers, someone operating their property remotely. They wanted to ensure that it got cleaned the same way each time. So you can create a checklist in there that your housekeeper is going to use. You can require them to upload pictures, you know, after they're done. And that website, that company has housekeeping referrals. It's part of their kind of application now. So you could probably find some through there.
Oh, that's good. So really, I mean, it sounds like you've almost taken yourself out of the running the business. It's not passive, but it's semi-passive for you at this time. So how many hours a week do you think you work in the business right now?
Yeah, I wouldn't say I spend hardly much time at all on the business. I do spend more time looking at new properties and new investment options. And so I'm still expanding my portfolio. I'd say that's where most of my time goes. But I usually review with my managers once a week, and our reviews, you know, an hour or so. And I mean, it's not too much more than that. Even adding new properties now, because we have all these systems set up, I can have my virtual receptionist add our new properties. You know, a manager on the ground coordinates photos, they get uploaded online, photos get shared with the receptionist, they plug in all of our normal parameters, and boom, we've got another property that's basically just kind of plugged into the system.
When you say, can you talk about the managers? So how, those are actually boots on the ground managers. Are they actually usually property managers, or just like a third party you kind of contract and pay them, you know, hourly or some kind of percentage?
So they started with me years ago in housekeeping, and as I grew, you know, they've grown with me, and they actually started with me in California, and they moved to Tennessee since I've been expanding there. So yeah, they just work with me in house, just with the short-term rental portfolio.
So that's good. So you really built a team to be super efficient. So getting started, obviously, you're not going to have that same efficiency as like you were saying, but you work towards that. So it really makes sense to cluster your properties.
You can definitely earn a higher net income, I would say, if you can create some of these economies of scales. You know, it depends on how you want to do it, though. You know, I mean, it depends on how much time you want to invest into it. If you're not hiring your own housekeepers and you don't want to do that, and you're going to be hiring a professional housekeeper, then that's one of the benefits. You could have 10 houses that are spread across town, because that professional housekeeping company is very likely going to have a bunch of housekeepers, and they have the staff to move around. So it really depends how much time you want to put into it. I think another easy way to not be so involved with the short-term rentals when you're getting started, even when you only have a few properties, is to look for a co-host. So a co-host, if you've used Airbnb before, a lot of times you might see a property available for rent and you see the host, and then right next to it, it has what they call a co-host. That's someone helping that owner or that host to rent their property, which is essentially like a short-term rental property manager. And a lot of times these co-hosts are looking for more properties to manage, because that's how they're making some of their money. And you know that they're already in your market or in that market where you're looking. So that's a really easy way to reach out to them and say, hey, are you looking at manage more properties? Because a lot of times they're going to charge less than your professional vacation rental company that's been around for 30 years. They're also going to have contacts with maintenance. They're going to have contacts with housekeeping. They're pretty much going to have all the pieces there if you want to not be really involved at all when you're getting started.
That's really good, because I have a bunch of long-term rentals in Indiana. Mm-hmm. And I master leased one of them to somebody, and they were running it, but they didn't really, they ended up not renewing their lease after 2 years. Mm-hmm. And it's right by Notre Dame College. So like, you know, you're getting a lot of, so it's like, God, what if I just transition some of these to short-term? And you know, I don't mind giving up a little bit piece of the pie if I don't have to deal with anything or deal with less. Yeah. So it makes sense. And I just never thought about that. You could go on and just look for co-hosts in that market. And then they're going to provide feedback like, hey, what are the relationships typically, if I know you don't typically have co-hosts, but do you have any idea of what the range might be of what they're going to charge, that kind of thing?
Yeah. I would say, and again, it's going to vary by property. So the smaller urban type places, I also like smaller properties because I get longer stays and there's less chance of parties. So just that's my part of what I look for. If you have two people staying in a property that only really fits two people, much less chance of a party, but also much better chance of a longer stay. So that increases the profitability too. But in terms of a base management fee, it's really going to depend by the property. I would say for these urban city type properties, on average, you might find a co-host between 15, 25%. Again, there's no like standardized way to be a co-host. So some might be, you know, coordinating housekeeping, doing everything. And some might say, hey, you know, I'll handle your messaging and I got a great maintenance guy, but you need to find your own housekeeper and I'll coordinate with them. So it's really a little more flexible with them. They're usually smaller operations, you know, but if it's a big vacation rental and the full management range from a co-host to a professional management company, it can be 15 to 50%. I mean, it really depends on market and everything. So.
And that's why it might make sense to just get somebody that's operating in, say, a virtual assistant in the Philippines, and they're managing other properties, and they're very experienced, and your dollar goes a lot further. So I have some friends that are doing a model like that, where they're just paying somebody in the Philippines. So there's really many ways to go with this. At the end of the day, you know, everybody has a little bit different take. A lot of people are buying big properties. You're buying small properties. A lot of people are buying vacation areas. You're buying more, you know, business type with a leisure component. You're doing smaller properties, so you're finding there's no parties and they're staying longer because maybe they're working remote, or maybe they're a traveling nurse, or that kind of thing. And then if it is over a 30-day stay, then at some point you do have to sign a lease as opposed to these short term. So you have to be kind of aware of the local rental laws too in those areas. I take it.
That's true. Yeah, we again, we have that automated. If our management system sees that there's a stay over 30 days, they get sent a lease automatically where they can sign digitally, and then we're protected on that end. So there's so many tools now. When I first got started, I mean, a lot of these software programs coming out like kind of worked, but they had a bunch of flaws. And now, I mean, it's like every other day there's some sort of new tool available. And one other thing I want to add too about the virtual component, the really cool thing about short-term rentals and having a virtual team is that once you build a virtual team, you can literally add properties anywhere in the world, and your virtual team is going to handle them the same way. If you have someone checking into a property in Spain, or you have someone checking into a property in California, it's pretty much going to go the same way. You know, they need to get access to the property. They need to know little tidbits of information, and they need to have someone to communicate with. But it doesn't matter where that person really is. So
most of your properties are owned, not arbitraged.
Yeah. Most of my portfolio is owned, although I did sign a 7-year lease for 10 apartments last year that have been working out really well too. An owner came to me and he redid what used to be an old hotel and said, "Hey, I'm not really an apartment guy. I'm a restaurant guy." There's a restaurant on the first floor. It's a really cool property. He said, "Are you interested in leasing them all?" And I was like, "Well, I already got the team there. I've got the virtual component. So really we just need to furnish them." So I signed that deal, and it's worked out really well. And that is also a really good way for someone to build cash flow to help fund their investments if they're not at that point yet. So there are some risky pieces in there. Like I signed a 7-year lease, which has small rent bumps in it. And it also has an addendum that says if my performance drops below a certain amount for 3 months consecutively, that I can back out a lease. So I'm pretty much protected on the back end too. All the furniture investment got paid back in the first year. So it's just,
gravy now.
Yeah. Just a bunch of pie.
What's the easiest way, like when you're in Brazil or Colombia and you're like, okay, I just got a new property, I got to furnish it. How do you go about doing that remotely?
It depends if you have someone there on the team. If you have a co-host, for example, someone that you're already working with, you could likely coordinate with them. I mean, these days we can order all of our furniture and just ship it right to a property. They have some websites like Modsy, for example, where you can send them pictures of your property and they will literally do the interior design online, shop over like 100 or so providers that you can order directly through them, and they don't even mark up the furniture. So you could have it sent there, and then, you can hire someone on Thumbtack or TaskRabbit or something like that to assemble a bunch of furniture if you already have a floor plan. So that's one way to do it. If you already have a team on the ground, then, your team can assist you with that stuff too. So.
Wow, that's pretty, you got all the tools. Do you have a podcast?
I do have a podcast. Yeah. I started a couple of years ago. It's called Short-Term Rental Riches.
Okay.
And they're basically just short, actionable episodes, like 7 to 15 minutes on some sort of topic related to real estate, but with a heavy short-term rental focus.
That's pretty cool. Do you do any mentorship or any coaching, or that's not a...
Yeah, I started doing some live events a few years ago. And so I've actually got the 4th one coming up now. So I'll be flying back to Memphis. That's in August 19th to 21st. So we'll have a good group of people together, and I try to just give everything I can in one weekend. And then I rent a little tour bus and we go visit some of my properties are operating. So and I have a website around that with some other resources and some of my tools that I use people can access for free. That website's restmethods.com.
Yeah, no, I've listened to a lot of different models, and yours just seems like it makes sense to me. The price point that you're buying these properties versus these big luxury properties, the kind of hedge against recession, and just like, I think it's a lot more achievable to scale in a market where like the affordability is still there and And then, basically you're looking for a market that you can 3 to 4x your long-term rent.
Yeah. Yeah. I think that's kind of the benchmark that I would go for 3 times. Yeah.
Do you have your own calculator that you kind of use as an like a pro forma calculator that you've built?
I do. Yeah, it's on my website at restmethods.com too. So
sweet. So
and it's got both.
Yeah.
It's both ways. I run the property, like I said, as a long-term rental first. That also helps with my financing options. So if a property is already occupied and it's cash flowing or getting very near there, then you're going to have more lending options. So I run it that way first, and then that same calculator I can use to plug in potentially what I can do on a short-term rental.
Yeah, I do commercial lending. So I do some Airbnb loans, and I broker to a couple different DSCR lenders that offer projection-based type of vacation rentals. Rates have gone up a lot with those programs. So I always tell people, look, we can look at credit unions and things like that, but you got to have the tax returns because they're going to look at your global cash flow, and it's a pain in the rear end. But or a lot of times I've been doing, I've done a couple portfolio loans they had like 6 in Florida, and I just did 1 loan on their portfolio short-term rentals. And then what I advise people sometimes is that if you have a 12-month track record and you can print your VRBO or your Airbnb, then these long-term DSCR lenders are more liberal. Because when you're just going in on a projection based, if the appraisal doesn't meet the long-term rents don't meet the DSCR requirements, you're kind of shit out of water. So we sometimes close with a bridge loan, like a 2-year bridge loan. Mm-hmm. Obviously, the rate's a little bit higher. It's interest only. Stabilize the property, and then get 12 months of runway, and then now you have options. You can go DSCR route, or you can go credit union route or bank route. Most of these people want to buy in their LLCs. Even with the DSCR loans, you're still signing a personal guarantee. Mm-hmm. Are you doing any of your do you have any properties in Brazil or Colombia, or is that something you're not dabbling in?
I have a property here in Colombia. I have one in Brazil, but I kind of just keep them as my personal residences, so I'm not renting them out at the moment. But I have been working with a really good friend of mine that finished a development down here last year. We made some offers on some lots to do a large development, both hotel and apartments that would be legal to operate as short-term rentals. So we're hoping, fingers crossed, that after months of negotiation, we get that signed back sometime in the near future.
Now, are you fluent now in Spanish and Portuguese?
Yeah. My Spanish is better than my Portuguese, but they're both pretty fluent.
How did you pick up? Did you know Spanish before you started traveling or living in these countries, or was it something you picked up?
I had been studying Spanish forever, not like with as much, not putting as much effort into it, I guess, as I should have. So it was kind of like this long thing. I studied in high school. I studied in college. I did do an exchange program in Spain, and I studied abroad in Barcelona. So I learned quite a bit there. But I think when I moved down here to Colombia, I'm in Medellin. There wasn't a lot of people speaking English when I first came down here. There's still not really. So that's probably when I got a lot better.
Yeah, you have to kind of learn. It's my wife, when I met my wife 3.5-4 years ago now, I was traveling in Mexico, and I met her through she's my friend's wife's younger sister's best friend. And so I was traveling to this small city, and nobody in the city spoke English. And when I met her, she's a good-looking lady, and I was like, okay, so I had the friends translating for us, and I was like, trying to spit some game, but she didn't understand anything I said. And but I've been trying to learn Spanish, and it's like you got to commit to it. So I pay for this app. Well, it's called Baselang. It's not an app. Mm-hmm. So you can go on, and then you can book calls with tutors anytime you want, 24/7. So I have I can get a tutor in Colombia. I can get one in Puerto Rico. It's cool. I just need to devote, because now half my family, actually more than half my family, only speak Spanish. So I'm like, yeah. So I think international is the way to go. I envision myself eventually getting a place in Mexico, and hopefully, but the goal is to do what you're doing. I just haven't executed the plan because, living in another country where there's, beaches and the lifestyle is just a lot more relaxing, right? Like, you don't have the same stress you do in the States.
Yeah.
But it's cool to see somebody that's operating at a high level, and you don't have to come back to the States only when you want to, really, to do events and things like you're doing. So that's really neat. I mean, I applaud you because you're like living the dream.
Thanks. Yeah.
Yeah.
A lot of my friends down here in Medellin, this has become quite the like digital nomad hub. It's another reason why I'm really bullish on this development project, but it's on Central Time, so it's not that different from, it's on part of US time zone. It's only 3 hours from Miami, direct flight. I mean, so it's pretty close. So it's very accessible. And yeah, when you come down here for the first time, or you come to a lot of places all around the world, and you're like, oh my gosh, my money goes so much further here. And I also at the same time enjoy this pace of life more, or everywhere's different. This city is very different than the city I spent time in Brazil, but it's just good to get out and explore a little bit, I think. And it's cool that so many of us can work virtually now, and that's not changing. So
yeah, no, that's really cool. I think you should write a book about it sometime, because that's pretty cool. A lot of us are envious of you. So we've got, if you're interested, whoever's listening in this in the future when we get this edited, restmethods.com, and you can go and do a tour, which I think would be a great way to learn, is actually go and look at properties, see the operations, and like what type of properties are being purchased, and what they look like, what the finishes look like, what the ADRs are, and occupancy levels, and really diving into the systems and tools. So you're going to teach kind of the Tim Hubbard processes, so they can efficiently do what you're doing and do it. My friend got into short-term rentals, and he scaled up pretty. In 16 months, he bought 5 properties. So he was a little bit overwhelmed. And then he finally, after 3, he's like, I'm going crazy. He got a virtual assistant that had experience. That took some burden off of him now. And now he's trying to because now he's doing really well. He bought some properties in Tahoe, and he had one go live. And he told me in the first 30 minutes, he had over $10,000 in bookings. I was like, whoa, that's incredible. But he's buying it. Yeah.
It's a high price place.
Yeah. I think he paid $1.4 million for that property. So he's got a, that property should be, grossing $30,000 a month or so.
Yeah, crazy, right?
Yeah.
Yeah, so that's the thing. And this is I talk about this in my events and on my podcast and everything. For me, real estate was a way to be able to travel and live this life. It doesn't really matter how I'm investing in real estate. I just wanted to achieve that result as quickly as possible. I mean, when I worked as a broker, we did really large apartment building deals and shopping centers and all that. But I was able to turn essentially one fourplex over that was making, $6,000 a month to almost $20,000 a month years ago. And just the one property really freed up a ton of cash flow and made that a reality just so much quicker than it would have had I continued investing the way I was, which was traditional rentals pretty much. So.
Yeah, that's what I need to do, to be honest with you. I'm like, okay, I have X amount of doors, and the cash flow is just not there. It's like I could just do one fourplex strategically and just crush it by 5 times, and that's what people need to really look at. And you don't need a ton of doors to just live that lifestyle, and you can strategically grow it. I mean, there's no race. I mean, once that one fourplex you did basically covered all your expenses and then some. So everything, that just freed up all your time. You didn't have to be transaction based anymore, right? That's for me, I still have to close loans. I have my X amount of doors, but it's not enough. And I'm like, okay, well, why don't I just do what all my friends are doing, and they're all smart, and, I don't need to take risks, but I could strategically buy and find the right areas. And you get 1, you get 2, and then you get 3 or 4. I mean, you could really 4 single family homes in the right markets could be enough cash flow to cover your life for good.
Yeah. I mean, if you think about it, in a lot of ways, I actually think it's more risky investing in traditional single family homes now because that net cash flow is so low. Let's say you're making $200 a month on a single family home, which isn't super uncommon now, or maybe even less. But then you take that and you are making $1,000 net income. Well, you just 5x your net income, which is essentially like having 5 of those long-term rentals, right? But you did it with one short-term rental. And so I like the properties I invest in because I can always go back and rent them as a long-term rental if I needed to. But with the way the environment is and the way that living and working are merging, I just don't really see that happening. I think short-term rentals are going to be a really good thing.
Yeah, and you know what else is cool? I just interviewed a CPA and we were talking about this, the kind of the loophole. If you materially participate in running a short-term rental, you can cost sag it. And that I told my buddy who I was just telling you about, he did it. And he offset. He made like 400 or 500, and maybe 600 grand as a mortgage broker. And I'm like, okay, now do this. And he called my cost seg guy, and like he's like, yeah, you're right. Like offset like $300,000 of taxable consequences. It's like, okay, like you don't even need to be a real estate professional. So like, I was telling my brother who's W-2'd and makes a boatload of money. I'm like, man, you're like paying like 40% off your like $1 million you're making a year in taxes. Like just go buy he's in Southern California. Go buy yourself something in Big Bear or wherever, right? And go, and then you can use it when you want. And then, you get the tax benefits year 1 through 3 or 4. And I think they have the accelerated depreciation right now. So it's like, I don't understand why more people don't do this. And they can even take a lot of burden off by getting a manager and still materially participate, to meet.
That's a great point. And something that most people probably don't know is that you can materially participate, which essentially accomplishes the same thing as being a real estate professional, but you can do it easier. There's my CPA is really, really familiar. She specializes in real estate. And we actually did a webinar and recorded it. And it's on the website I gave, restmethods.com. Anyone can watch it for free. It's under our recommended resources. It's like an hour long if someone wants to explore that topic a little more too, because you can have a property breaking even, but if you get this huge tax write-off and you're at a 40% tax income bracket, then, that's money back in your pocket. So that's a great point.
Yeah, it's like a no-brainer, really. It's like, do you want to pay the government, or would you rather keep the money and then buy an asset that's appreciating? And you got mortgage pay down, all these things. Well, Tim, I don't want to take too much of your time. I know you're busy hanging out on the beach and doing your thing today. So, but you dropped a lot of wisdom. I'd love to get you back on the show in the future. We're putting on some virtual events too. You would be an amazing guest speaker because you're like living the lifestyle that most of us are like, okay. It seems overwhelming for us. Like, okay, like I'm so used to like going upstairs into my home office and working all day, and like it's like, okay, there's a better way. There's a better way of doing it, and you can really start strategically. You can start with that fourplex that you own or occupy for a year. You get an FHA loan, guys, 97.5% financing. You come up with 3% down. You live in there for a year. As you're doing that, you start converting some of the units to short term. Then after that year, because you got to live there a year, you move out. Mm-hmm. Maybe you can cash out, refinance, or maybe you just keep the FHA loan, go buy another one. Now you got 8 units that are short term rentals and probably giving enough cash flow to cover all your expenses. And you did it with like virtually no money out of pocket. God, we should write a book on that. That's like a beautiful thing. Like it is. Like, skip the 9 to 5, go straight to like the. We used to call it the flip-flop lifestyle, right? The flip-flop lifestyle. You wake up and you never put socks on, never shoes. It's just like the only time I ever put shoes on is like when I'm going to the gym. Like other than that, it's flip-flops. So, man, this was awesome. Like it always inspires me to get people like you on the show that are just like, you're a pretty laid-back guy, and you're not like, you don't need to be some whale buying millions and millions and millions of these huge apartment complexes to get like the cash flow you need to live the lifestyle you want. And so I do a show on Friday with a guy, and he buys like huge, like $60 million multifamily buildings. He does syndication, And I'm like, that's great, but I don't really want that for me because I don't want all these investors and all that stuff. I just want to, you know, this is more my lifestyle, what you're doing. And so it kind of resonates with me more. Like, yeah, just like everything you said was like dead on. I'm like, okay, you know, it just reinforces why everybody should be looking at this. And it's not, if you do it right, it's not going to be any more time consuming than a long term. A little bit more of a setup for processes and systems, but once you get it set up, it's similar to a long term rental. So as far as time and management. So Tim, appreciate it. I'm going to put all of his suggestions and his website in the show notes below. And I would highly recommend you guys follow his short-term rental riches, because I mean, he just delivered a ton of value. So I know if I'm going to download that right now and listen to it at the gym when I'm walking on the treadmill every day and like motivate me. So thank you so much for taking the time with us.
Yeah, thanks for having me on. It was great. And yeah, you know, let us know if you've got good financing options too in the future for short-term rentals, because we're always exploring those and our students are. And so that's a changing environment as well. Yeah,
and that's what I'm always evolving. I'm always looking for the best funding sources for, you know, there's kind of like two kind of DSCR lenders out there that most of us know about that I do broker some deals to them once in a while. But I'm hopefully eventually there's more, I foresee there's going to be more of a kind of a hybrid lender that comes out is going to really not just price on a DSCR level for kind of like these transitional, where they'll look at it more from a commercial standpoint. And I think that's what we really need is like a bank or credit union that really starts kind of paying attention to this space. Because if they don't, whoever really taps into this market is going to crush it, because everybody's going to go see them. Everybody's going to go and like, and nobody wants to go like, you know, it's sad when rates were 4.5 on this DSCR loans 2 months ago. Now people are like 6.5, 6.75. But the good thing is there's a lot of cash flow. So, you know, I'd still close a deal even if the rate's 6.5 or 7%, and I'm making $3, $4, $5, $6 a month. So it really comes down to a component of the property.
Right.
Yeah. So awesome. This was great.
Good stuff. Thanks, Beau.
You delivered.
Thanks for having me on, and look forward to staying in touch.
All right. Thank you so much.